Will LinkedIn's first day pop rank among the top 10 of the post-bubble era? Joining us on the phone to tackle that question is Paul Bart. He's an analyst and director at the research firm Sheila just mentioned, Renaissance Capital. This is a firm that is an IPO investment advisory firm. And Paul, great to have you. Thanks for joining us on the phone. So let me ask you, were you surprised, or are you surprised at the big pop that we're seeing? It's up about 135% on the day right now.
No, actually, we weren't terribly surprised. We knew this was going to be a super hot IPO, and it really just shows that gives us further evidence of the enormous appetite for these major, we'll call them wave of next generation internet companies, and LinkedIn being really the first one, and giving investors the first opportunity in the public markets to gain access to this sector.
Paul, do you expect the stock to hold on to its gains going forward for the rest of the year, or this is sort of first day euphoria?
I wish I had that crystal ball. Typically when you have IPOs come to market with such enormous hype, there is a propensity for them to kind of overshoot initially and then settle into a range. Having said that, I will tell you that a number of high-profile, high-growth IPOs, and you've mentioned a couple, have been able to hold on and, in fact, go higher in the aftermarket. Now, valuation certainly is going to come into play, and it depends what your time horizon is. These stocks can be volatile, and so we would expect some big swings here and there, but the key will be if LinkedIn can really put up the numbers and meet the expectations that are being set out there. And let me tell you, with the stock trading at $110 a share, the expectations are quite high.
And Paul, let me ask you this. We haven't seen this kind of hype over an IPO in quite a while. There have been a few, though. Zipcar, Sheila mentioned a few of them. What do you say to the investment banking team that actually came up with the pricing for this deal? I mean, should it have been priced at a higher range?
We've gotten that question quite a bit, and I'll give the same answer, and that is and I'm sure bankers are going to give you the same answer, that pricing these deals is really more of an art than a science, and you can get all the input from investors on where they would come into the stock and think that you have the orders and it's a fair price at the price you set, and hope that it goes up, a reasonable amount on the first day, but you never can always anticipate the amount of demand that you will see in the aftermarket. And in this case, it was a very small deal, so allocations, investors got a very limited number of shares, if any at all. And so, given that lopsided supply-demand situation, naturally you're going to have a big pop on the first day. And that's what we're seeing. And let me also say, if you look back at some of the successful IPOs in the past that even have gone up 50 or 100% on the first day, many of them have gone on to even stronger gains. And I'll point you to companies like Chipotle Mexican Grill, even Baidu that shot up. They came back down, but eventually they rewarded investors. So, it depends. You're not always going to get it right with the pricing. And I think that, the major shareholders have kept onto the stock, and they believe that there was value there, and they want to see the stock continue to go higher.
Paul, we've got about 15 seconds here very quickly. Do you think now we will start to see more social media companies go public with this data point?
Yeah, without question. I mean, this type of reception will give any social media company out there, even, kind of on the cusp of social media, to be having active discussions with bankers. And they see the demand from investors, and you can rest assured you're going to see many more companies go public, the high-profile ones, but then also some of the smaller ones out there that will try to capitalize on this wave of interest.
All right, Paul, thanks so much for joining us. Appreciate the insight there. That was Paul Bart, analyst at Renaissance Capital, an IPO investment advisory firm.